Okay, so if I want to plug in my
Yep.
thumb drive,
Oh, yeah. Yeah, absolutely.
actually, I need to grab something off of this.
Okay.
Rack.
You still have those, huh?
Yeah.
That's awesome. Oh, Susan was on there.
Plug it into a USB port.
Yeah, just right here.
Okay.
Yep. I'll get the You all set?
I think so.
Okay, cool.
Thank you.
started here.
full time.
Oh, just full time.
Yeah, I started 5 years ago, but I went to freelance and national DFC.
Okay. I just got my license a week and 2 days ago, so it's like also new, and I took my license. Yeah, I was selling cars.
Oh,
Well, I did that for just over a year, and then I sold like ever, and furniture and stuff. A lot of sales.
yeah.
But,
You have the sales experience, so that's great.
yeah, that's how I
Exciting.
think. Yeah.
This is a great time to start with. It's really nice.
I was just talking to Tammy, and she said that.
Yeah, yeah, it's great. You know, I was talking to my husband this morning. I know some of it. The amount of training we're having.
Yeah.
You know, you learn something new every day.
Yeah, and that's why I was like, oh, good, because it's all like, gotta do it on your own kind of in a lot of places. And I
So I
don't
don't know
know,
how
like,
you
it's scary. Well, I guess I don't feel like working as a team at all, but,
39-year
yeah. Hopefully it will. I have a 5-year-old.
It just transforms them all.
Little girl.
Your IRS.
Steve. Oh, okay.
It's pretty amazing.
Oh, yeah.
Yeah, I think that a lot lately.
So,
Especially when I see this weekend.
you know what?
It's either she's looking too old or.
A little bit both, maybe.
Yeah, that's great. It's a great job.
I just told the story.
That's what I
last night.
wanted to get back to. Yeah, because I did that with Purdue on my own. Well, my actual office, that's fine. So long, but,
The guy listening,
yeah, I hated working with
there's a good listening.
when you have a kid, and now you have to spend at
Go
least
over
3 days.
gas. Didn't hear you.
Hybrid.
So,
Right, yeah, yeah. We did that the last couple months.
Probably first day. Yeah.
I really had time deciding what I was going to do this year, but then
So
we found this amazing Lutheran school right around the corner from my house.
aging just before
So she's school.
Oh, that's nice.
But yeah,
another agent.
Yeah, some places do, but a lot of them, I know how she is in public school, so. But then I was like, going to the town, and they're going to, Lutheran, I think it's a Catholic school.
And
Yeah, and I'm like, huh, well, they take her all.
Everything goes.
It's pretty much.
He's like, well,
No,
he
it's
was
probably
a
not yet, but.
pretty good
but
client.
it's great.
What did you do before? Or what did you do while you were doing
He's
that?
all,
So I was,
Here.
my mom had a cruise,
sure.
Oh,
and she was hired.
I
So I was.
Turns out
taking
the
over.
client
It was a lot of hands-on.
is
Money, it's giving visitors. It's,
name.
Right.
yeah, so.
They
That's
Mine, yeah, well, mine was,
knocking your house to the ground.
my mom was to Ecuador, and we did dirt, and she, works through the summer.
And they wanted to
But
buy
this
a
one,
house
I
that they mostly liked. They could stay in all over their house.
That's good.
Yeah.
Yeah, and I hear a lot of people, like the numbers are
Yeah.
way good this year, and there's even last year.
Oh,
So, figured, good time to jump in.
But I'm just on the phone.
Unfortunately, I believe that's right.
Yeah.
Oh, yeah.
Maria, okay. And I'm worried. You know, yes, it is.
Yeah.
That's funny.
Yeah, I noticed that.
Way too much.
Didn't get it.
We're supposed to be.
And it's still a night.
That's what it is.
Oh, you're not.
Well, I've been looking, yeah, I've been back.
Yeah.
Might not see it.
Yeah.
10 months. Ernest
Yes.
Yeah.
Yeah, it's
Right.
Yeah.
And, I just can't. You can't find anybody who thinks, oh, COVID, I can go steal stuff. I'm not. Okay. Sure. Well, I'm ready. I
Yeah.
have my cash on the sideline. See anything. I mean, probably a million people do the same thing, but yeah. I'm okay.
Oh, 12:15, so probably,
Before
Yeah.
association. Or, small. I mean, I had a rental in the summer for many years. In particular, split property. Yeah, I probably prefer, like, I suppose if you said Minneapolis South. Yeah, so not north of Minneapolis. I've kicked two tires on stuff like we have regions over there too. It's a good market. Like it's a couple interesting things for some projects. Seems like nice. Okay. Decent buys.
Yeah, I haven't seen any reason. Right.
Okay. All right. Well, I like that area. Very opposite. Nice.
Oh, 15.
Oh.
We'll give it a few minutes.
Yeah. Are we on camera?
Yeah.
Now this is on my local works. Increase the total box involved. Okay. So the broker engine markets. When did you do your election? Okay. So just to give you some context, live for context. We won this election in third week of February. And they got their letter in August. So, and the IRS did, they slip out these little press, well, sometimes it's a big one. Very often they slip out these press releases. Like we see, they did put out a press release Thursday that they are still 5.3 million pieces of mail behind. That's and so mail in this term in this the context is holistic. Could be an amended return that was mailed to them. Could be an estimation. Could be a reply on an audit letter. Yeah, so we're still 5.3 million. So it wouldn't surprise me if we go into 2021. worst case, we file an extension policy, and then we mail in an extension. So that's the letter. So we pay electronic LLC. So that's why you guys. That way, you're covered. Just normally, you would, in a situation like this, where you days, you would go ahead and file a return, assume proof, and then you would just mail it in. So we try to keep out of your so we mail it. This year, we did everything we could not to mail stuff. Because they're very clear. But by the way, this is pre-COVID. That's the great part. Pre-COVID, you know, they were telling us with the IRS CPA channels, we are way short staffed. Expect, you know, 90 to 180 days. And COVID, and they basically focused on, you know, keeping the basic machine running, processing emails, processing payments. So, yeah.
Get started here. Well, good morning, everyone.
Good
Oh,
morning.
hi. Hey, you are
Lori.
Lori. How are you?
Good. Had my license for about a week and 2 days.
All right, perfect.
It's all pretty new, but I'm excited.
Great, great. All right. Well, my name's Tom Wright, and so what we're gonna kind of go through here is I'm gonna give you a little background on myself. Just tell you why I'm teaching this class, you know, how I got to this point of teaching a P&L class, and then we're going to talk about what a P&L statement is. So just gonna talk about, you know, why it's important for your business and how it can help you in your business. So I've put together a P&L tutorial, which goes along with the workbook I've created, which we'll get to both of you so that you can use those. So the tutorial is kind of like an instruction manual. It shows you how to get through the workbook and answers a lot of questions. Then we'll actually get into working in the P&L workbook. You know, show you how to make entries, how those post over to the P&L automatically for you. And there's also some reporting tools in there that will help you in managing your business. And then we'll talk about some takeaways from what we've gone through. So first off, again, my name is Tom Wright, and so I'm an agent here at KWPR, and I'm also an ALC member. And so prior to getting into real estate, I spent over 20 years in the call center industry. The company I worked for, we had about 25 call centers across the country, a couple in Canada. I was responsible for overseeing anywhere from 6 to 8 of those locations at any one time. So I travel to these locations, and we do audits, inspections of the call center. And one of the tools we used in analyzing the business was a P&L statement. So with that, we could instantly see the profitability of the center, and we could make adjustments quickly by, you know, looking at the expenses. Is there somewhere that we can cut back or cut out an expense to increase our profitability or look for additional revenue streams? So in 2015, the company I was working for was going through an acquisition and doing some restructuring. I wasn't real happy with how it was going to be affecting me in my position. So I made it a goal to get my real estate license, which I did in the fall of 2015 and joined Keller Williams here. In 2017, it got to a point where I was getting too frustrated with the call center position and decided to jump in with both feet into real estate. And as my business started to take off, I made some sales, it's great, things are looking up, but I realized I wasn't kind of practicing what I was preaching in the call center and using a P&L to help analyze and run my business. So I created this workbook and was using it for myself. And then in 2020, I was asked to be on the ALC. And so my initiative in running the finance committee was to provide a workbook for everybody that was as easy to use as possible for tracking your expenses, analyzing your business as far as profitability. And so I've tried to simplify Excel as much as possible. I know everybody has a different level of comfort with Excel. And so I've tried to minimize the fear in using Excel. And so as you'll see, I'm kind of an Excel nerd as well. All right, so what is a P&L statement? Easy way to look at it is it's kind of like a scorecard or a health report for your business. So you're going to be able to look at that and see, a summary of your income, your cost of sales, your expenses, and bottom line, what is your net profit? You'll be able to dig in deeper to kind of look at those expenses. And at the beginning of COVID, back in March, one of the things,
Am I late?
No, you're fine. You're fine. One of the things that Gary Keller talked about a lot was, looking at your business, look at your P&L, cut expenses where you can to increase that profitability. So I've modeled the workbook after MREA. I don't know if you've read Millionaire Real Estate Agent yet, but I highly recommend it. So this is modeled after the budget model in MREA. So I just want to read a statement. It says, there is a natural monthly rhythm to business, which demands that you examine your books at least once each month. I'll go as far as to recommend you keep a monthly budget, but address it on a weekly basis. Why? Because leading with red light, green light require you to stay in touch with your spending. And this is a statement from Gary Keller in the budget model chapter. So if you're not familiar with what red light, green light is, basically it's, when your expenses start to creep up in cost, and at some point they will, then it's time to pull out the stop sign and reevaluate that expense. And if you are getting more revenue than it costs, then let it go and run with it. Otherwise, look to see how you can cut back on that expense or eliminate that expense to increase your profitability. Uh, 41, how many of you are currently using any sort of financial tracking tool for your business? Whether it's Excel spreadsheet, Quicken, QuickBooks, anything like that. Dwayne, what are you using?
QuickBooks in an Excel spreadsheet.
Okay, all right.
Checkbook register.
Okay. All right. Well, hopefully this is a tool that you'll be able to use for your business. And this works for a solo agent, for a rainmaker, or for a team member. So regardless of how your business is set up, this will work for you. All right, so I've just got a few screenshots of the tutorial in here just to kind of highlight some of the features that I've built in. I use a lot of color coding in my Excel workbooks. I'm very visual, so I like to be able to, you know, have a color jump out at me and kind of tell me where I need to go. So wherever you see a green cell within the workbook, that means you can enter data into that cell. If it's not highlighted in green, then it's likely got a formula built into it that we don't want to erase. Doesn't show in this screenshot, but on the bottom of the spreadsheet, there's 10 different tabs. Again, those are color coded. A green tab means you'll be able to enter data somewhere in that spreadsheet. If it's a black tab, it's either for informational or reporting purposes. One other thing, I tried to eliminate the need to make duplicate entries of the same thing. So for instance, where you see it says any agent, that's where you'd enter your name or your business name, as well as the year that you're budgeting for. And that information is going to automatically transfer over to multiple sheets within the workbook. All right, we're going to touch on chart of accounts in a few minutes. But basically, when we're looking at the P&L statement, each of these are primary categories. And within that are subcategories that provide more detail of a given expense or income. You'll see these plus signs down the left-hand side. When you click on a plus sign, it's going to expand the category. So now you can see all of the subcategories under the primary. You click on the minus sign and it'll collapse that. Up at the top of the column above the plus signs, there's a number 1 and a number 2. If you click on the number 2, it expands all of the categories simultaneously. So you can see the detail on every line. And then if you click the number 1, it'll collapse everything. So it really depends on what type of view you want to see on the P&L statement. You know, if you're focusing on just one category of expense, then you just want to expand that. This, I think, is probably one of the most powerful spreadsheets in the workbook. This allows you to do a comparison between your budgeted amounts for the year and what your actual amounts are. So in the drop down, you can select any given month and see what your actual expense or income is versus your budgeted income or expense. Over to the right, it's going to show you whether you're over or under budget. One caveat to that is cost of sales, where you see that's showing as red. So we're over budget. That's not necessarily a bad thing, because if you look at our income is way up. So accordingly, our cost of sales are going to be up. So red in that category is not necessarily a bad thing. But when you're looking at expenses, the red and green really tell you where you need to focus and dig deeper to see if you can make changes. All right, before we get into the workbook, just a couple of Excel items. This is compatible with the desktop version of Excel as well as Office 365. It does also work with Google Sheets. However, there's a couple of functions that won't work. One is there's a graph within the workbook that does not populate in Google Sheets. Trying to remember the other item that doesn't work. I'll think of that. I'll remember that in a little bit. All right, so when you first open the workbook, you're probably going to be prompted with a security warning. I've got macros built in that drive some of the functions in the worksheet, such as the ability to expand and collapse categories. So you'll want to enable that content when you get started. And then the first time you use it, I would suggest doing a save as, and just tag it with the year that you're tracking. That way you save a blank copy that you can use for subsequent years without having to delete everything and start all over.
Where's this, workbook, where does this live?
Right now, on this computer. I'm gonna have Taylor get this out to everybody, so it'll be on the,
So make sure that there's nothing I can follow along with right now.
yeah, I'll Taylor put it on the Facebook page.
Okay.
So everybody has access to it. All right, let's jump out of here. All right. So here we see the security warning. So all we want to do is click on enable content. Now we'll be able to make edits and utilize the features in the workbook. So the chart of accounts, this is taken right from MREA. If you're not familiar with what a chart of accounts is, and actually Tom may be able to expand on this a little more for us. Tom is with Valley Tax Accounting, and he's going to be talking to us a little later. But a chart of accounts is basically a way for you to categorize your income, your expenses, your cost of sales. And each category has an account code associated with it. So if we look at residential income, the primary category is 41,000. Under that, there are subcategories which allow you to kind of define specifically what type of income it is. So you've got listing income, sales income from a buyer, referral income, and leasing income. And so each of those has a subcategory or a subcode associated with income. And we're going to see the same thing with cost of sales as well as expenses. So a primary category and then a number of subcategories underneath that. Over to the right, there are some explanations that kind of help you with determining, where you need to put a specific expense. So if you have any questions, you can always come over to the right to figure out, is this where it needs to go? All right, so it's a pretty exhausting list. So as you can see, this is a black tab, so it's for information only or reference. So what I've done is tried to minimize the amount of data that you've got to look through. So if we look at the itemized revenue tab down here, this is where you're going to enter your commissions. And I have the chart of accounts that applies only to income or revenue. So you don't have to sift through all the expense items, cost of sale items, etc. I've done the same thing with cost of sales and with expenses as you enter those. All right. Everything kind of starts with the monthly budget. So I'm going to go ahead and collapse all this. And so again, getting started, you enter your name or your business name here. And if I can spell, it would be better. So my business name is Right Agent. And then we enter the budget year that we're going to be tracking. And as I mentioned before, that information automatically transfers over to multiple sheets in the workbook, so you don't have to make multiple entries. So actually the timing for this class is I think, perfect, because we're coming to the end of the year, we're in the fourth quarter, and we're going to start thinking about 2021. So you're going to start, setting your goals, number of transactions that you want to achieve, your GCI that you're looking to attain, and then creating your budget off of those numbers. So the budget allows you to be able to break that down on a month-by-month basis. So now you've really got something to follow going through the year and something to shoot for. This is probably the most exhausting part of the workbook itself, is creating your budget. So again, if we expand the category and we start with revenue or income, you're going to break that down by, how many listings do you anticipate on a monthly basis? What is the expected sale price of each property, so that you can determine what your GCI is going to be. And so remember, when you're plugging in your commission for listing or sales, this is not the amount that's going to show up on your check that you get after closing. This is the GCI. So this is before any of those deductions come out. Okay? So we break those down on a monthly basis. If we look at line 9, total income, this is your GCI for the year. When we go down to cost of sales, again, this is going to be dependent on, if you've capped or not, whether you have company dollars coming out or royalties. And then when we look at line 17, gross profit, this is going to closely match your 1099 that you get at the end of the year from the market center. And if we expand all the categories, then we can break this down as far as the different expenses for each specific category. And one caveat I want to, or just mention, I'm not a CPA, I'm not an accountant. So I'm not going to give you tax advice. That's what Tom is here for. So if you're working with an accountant or CPA, definitely check with them to find out what your tax liability is. Everybody's is going to be a little different depending on their situation. But once you determine what that number is, a percentage number, you can plug that in here into where it says anticipated tax. So let's just, for instance, let's say it's 25%. Here on line 97, we're going to get basically an estimate for what our tax liability is on a monthly basis. And, this is an amount that you'll want to set aside so that come tax time, you've got that money there.
That including your social security tax too.
That should be everything, yes. And so a couple things I highly suggest. One, do not intermingle your personal and business expenses. Keep those separate. Keep separate account for your business versus your personal. It will make your life a lot easier, not having to sift through and figure out which one goes where. Another thing, I set up a separate account, actually a money market account, that I put funds from my commission into. And that's to fund me at tax time. So I don't have to go robbing from Peter to pay Paul. I know that money's there when tax time comes around. I also have a separate account where I put money into for things that I want for my personal goals. If it's a vacation, a new car, whatever. And I set money aside there, so I've got a fund that I can go to. All right. And anytime, don't hesitate to ask questions. If you need me to go through anything else, let me know. All right. So let's start with plugging in income. So there's a couple of ways you can do it. One, you can manually enter them in. With income, you're probably always going to manually enter. As far as a description, it's whatever works for you. If it's, the address, the client name, however you want to categorize it, that's entirely up to you. All right, so what I've done is, let me find I've got some sample data that we're going to plug in here that I've already got categorized. And we'll paste this in. And so now if we jump over to our P&L, we can see that I've got data plugged in here, listing and buyer income. And so our P&L is starting to take shape a little bit. We're going to now add cost of sales. And now cost of sales is something that a lot of agents kind of get confused on as far as what is included in cost of sales. The easiest way to think of it is if you don't have a closing, you don't have cost of sales. So cost of sales is going to be the commission or the company dollars that you're paying the market center until you cap, as well as royalties paid to KWRI, which everybody is at 3,000. So until you get to that 3,000 number, you'll be paying that in. If you're a rainmaker, other pieces of the cost of sales are going to be if you have a listing or buyer specialist and you're paying, them that commission. So that commission split will go under cost of sales. Does that make sense?
What about an assistant?
An assistant?
Yeah.
If you don't have a closing, do you still have to pay the assistant? Okay, so that's going to go under salaries. Okay. All right, and then we will grab some expenses here. And plug these in. All right, so expenses are the big area where you've got to do a lot of, categorization as far as determining what the account code is. The account code that you assign to each expense directly correlates with where it's going to get placed in your P&L statement. So let's, I'm just going to take this out for right now. Where's the delete key? There it is. All right. So one way you can find what account code that you need for a given expense is one, to scroll down through the chart of accounts to find it. So I know that, a Speedway, I got gas. So I'm going to go down to automobile, find what the gas category is, and there's my chart of account code that I need to enter. A way that I find that's a little simpler is just using an Excel feature called Find. It's Control F as in Frank. Brings up a little window. All I have to do is type in gas as far as the expense I'm looking for. Click on Find Next, and it takes me right to the category. So I know that 66300 is the code I need to enter. All right, so now when we look at our P&L, we get a little better picture of, what our expenses are on a monthly basis. We can drill down on any given expense to kind of see where we're spending money and make determinations as to whether, are we getting our bang for our buck on it, or do we need to maybe make some adjustments? And the variance tab, let me go back. Tom, when you're looking at a P&L, do you care about what we did in January versus what we did in August? Or are you looking more at an overview, just wanting an annual look at the P&L.
Well, it depends why I'm looking at it.
Mhm.
I rarely look at a P&L without some kind of context. So it could be looking at a month versus budget, right? What did I think I would do this month? Okay, how did I actually do? I
Okay,
might look at a year ago, especially if there's seasonality in the business. That might be a more relevant comparison.
okay.
But I usually like to have something that I'm comparing P&L against, so that I have some context for how I think.
Okay. All right. Well, for anyone who just wants an annual view, I've got that built in as well. So if you're just looking at the full year numbers for yourself, you've got the same capability as far as being able to expand and collapse categories to see the details. But it's not broken down on a month-to-month basis. So again, just depending on which view you're wanting to look at. Now, the variance tab, this is one I think is pretty powerful because it really gives you the ability to analyze your business on a month-to-month basis. So you can take a look at what your actual income and expenses are versus what you've budgeted for the year. And then instantly see, you know, am I up or down? Do I need to make adjustments? So if we look at, you know, this is a category that's showing in red. We're 149% over budget. All right, is this something that I can cut back on? Can I eliminate it? You know, gas, it's kind of hard to cut back on that, you know, if you're out doing showings and everything like that. But, all right, and then we can select from the drop down and look at any given month to see that comparison. So now we can make adjustments quickly before they get out of hand and make sure that we are, you know, being as profitable as possible, because that's kind of why we're in business, is to make a profit. All right. And so as I mentioned before, I've modeled this after the MREA budget model. And so this chart I have pasted down here is the best practices from MREA. And this actually is the latest and greatest because this is the new chart that's going into MREA 2 when it comes out.
How much, what changed?
Just some of the percentages.
Okay.
So, you know, this is taken from thousands and thousands of, you know, transactions from agents. And
Yeah, because
so
expenses have definitely changed over the
They have.
last 20 years.
without a doubt.
Yeah. We never had computer and cell phone costs like we do today.
True, true.
Technology. But yeah,
So-
advertising is way up, so.
Yeah, we don't have a lot of the print advertising that we had to have
Right. Oh my
before.
I have huge printing bills.
So in the best practices, there's something that you're probably familiar with if you've read MREA, and it's a 30-30-40 rule. So 30% of your GCI should go towards cost of sales, 30% towards expenses, leaving you with a net profit of around 40%. And this is great if you're netting $1 million a year.
Can you repeat that?
Yes, 30% of your GCI, your gross commission, should go towards cost of sales, 30% towards expenses, leaving you with a 40% net profit. So the 30-30-40 rule is modeled for that $1 million agent. So chances are you're kind of like me, you're not quite there yet. So we need to look at the different GCI categories and find the one that most closely relates to your business and where you're at. So for instance, if we look at 150,000 GCI, our cost of sales should be around 13%. Our expenses around 38%, leaving us with a net profit around 49%. And again, these numbers are going to differ depending on how your business is set up. If you're a solo agent, it's probably going to match this fairly close. If you're a team member, these numbers are going to change. Cost of sales will probably be, pretty similar to that 13%. However, your expenses will probably be a little lower because chances are the rainmaker, the team leader, is going to be picking up a lot of those marketing expenses for you. So your expenses overall will be a little lower.
Now, do you have taxes included in those expenses or not?
Yes.
Okay, okay.
All right. So once you've started plugging in numbers into your P&L, you can come to this page, this sheet at any time, and just click on refresh chart. And now you can visually see where your business is at based on best practices. So we can hover over any of these columns to see what our percentages of cost of sales, our expenses, as well as our net earnings. So we can see that on a month-to-month basis as we go along, as well as where we're at the end of the year or for the year total. Okay. Does anybody feel this might be helpful in running your business, kind of knowing where you're at?
Sure.
Okay, good.
If I can figure out how to make it all work, yeah.
It's easy. I'd be happy to help you, by the way. Dr. Wayne, you mentioned that you use QuickBooks.
Yeah.
All right, so you're making entries into QuickBooks, or you've got somebody making entries for you.
Yeah, how mine is set up is basically I have all my credit cards and my business account associated with QuickBooks. So then basically I just go through and work business, personal, and it goes into different categories. I don't do it enough.
Okay.
I'm one of those people that waits till the last minute.
Aha.
Enjoy myself
Get a different
nuts.
credit
card.
card.
But now I plan on doing it like every other Friday, just
Good
balance.
idea.
So
Good idea.
that's why I'm in here.
All right.
One more tip too. The best thing I ever did was I have a business credit card and I have a personal credit card.
Yeah.
And it makes so much easier.
And never the two shall meet.
Yeah, I have a business
Yes.
credit card, and my personal credit card isn't attached to my QuickBooks, just my business stuff.
Okay.
So,
All right. Well, the reason I bring up QuickBooks is I know that there are several agents I know in this market center, as well as in the other ones that I've been teaching this, that do use QuickBooks. And so I don't want, if you want to use this, I don't want you to have to make all these entries all over again, because you've already done them once in QuickBooks. So what I
You do this
did,
instead of QuickBooks, is that what you're saying? Because I don't use any, and I'm trying to figure out which program to use.
you can use them in combination with each other. I'm not real familiar with QuickBooks, but I know that you can upload the chart of accounts, MREA chart of accounts, into QuickBooks, so that you can utilize the same coding
But you could just
format.
do it on an Excel.
But you could also just do it on Excel. If you want to utilize what you've already put into QuickBooks and plug it into this workbook, I've set up a tab that allows you to do that without having to make those entries all over again.
You don't have one of those for a journal, do you?
Not yet. So this is a sample export from QuickBooks. And I can also set this up for your business checking account, your business credit card, as long as you have the ability to do a CSV export. We can create a page like this to eliminate having to make those entries manually. So if we take what we just copied from QuickBooks, plug it in here, it automatically converts the data into the format that I use in the workbook. So now we can copy this data that's been converted and plug it into our expenses tab. Go down here, go to the first line. Now all those entries are already in there, and the only thing left to do is categorize them based on the chart of accounts. So again, trying to eliminate the need to have to do multiple entries of something you've already done, or in the, as it relates to a checking account or a credit card, if you can export those, the explanation's already there, the dates are there, the amounts there, and we can copy and paste them in. All right, questions?
Where did I start? I'm just kidding. I just know how difficult Excel really is to use it on a very high level. Like, I know I can get it, but I'm just kind of I'm everywhere with it right now. Just a lot of information kind of coming in, so I don't know. But
It's easy when they set it all up.
Yeah, and that's what I'm thinking. I'm like, maybe once it's all set up.
So with this workbook, like all those little extras, is already in there. We just have to punch the numbers in then.
Right.
Basically, so that's easier.
Right, yeah, so you don't have to create any formulas, you don't have to reinvent the wheel, it's already been done, and it's basically a matter of plugging your data in. And, I've got it set up so that, once you make an entry, it automatically transfers over to your P&L. So you don't have to worry about where it goes in that context. But any other questions before I jump back to the PowerPoint?
I have a question.
Yes.
So, do you put all of your gas expenses in there?
I do.
Okay, and you just do that so you can keep track of it? Because you can't actually write all of it off on your taxes, right? Whatever. Don't you have to like pick between if you're gonna do miles or gas?
Like itemize or.
It's a percentage you
itemize
use your car
hours.
for business.
This is like the more granular way of doing it, but it's a better write-off. It's just harder to actually track and do everything right.
I'm only asking because I spend a lot of money on gas, and I just went through like I just figured out how much money I spend a month on gas, and now I'm starting to think like maybe I should try to write that off instead of my miles.
And I'm going to leave that to Tom.
You keep all your mileages?
You want me to
Yeah.
answer that now?
Yeah,
Sure. So you probably know, but I won't assume that you do, that you must choose an automobile method. You can either do miles or you can do actual expenses. If you choose actual and you use that vehicle to run to the grocery store, to run here, to run there, right? It's now a mixed use vehicle. You're using it personal and business. So if you're going to go with actual expenses, fuel, insurance, car washes, you have to track how much of your mileage is personal, how much is business, and then you can only deduct that percentage business. So there's some operational factors when I advise people which way to go. Some people are built to do actual, and they've been gifted by God to track everything, and there's no problem. Some people are not. That's okay. One isn't great, one isn't wrong. They're just different. Another thing to think about is that, and at this point in my career, I don't have to be theoretical. I can just use a guy named Troy, let's say his last Troy bought a high-quality used Honda. And he's done very well with real estate, and he puts on a lot of miles. When you compare the mileage deduction to the cost of that car, he's probably paid for that car 5 or 6 times. Because of the number of miles that he puts on traffic. So there's a couple of different considerations. What I love about, so let's say you chose mileage. In any business, whether it's this business or another business, there's tax. And then there's cash flow, there's real life. So what we do at tax time, right, that's a certain way of looking at the world for tax purposes. But let's say you're doing mileage. I still would track your fuel. Because I think as you analyze your business, and then we go back to something Tom said at the beginning, are you getting your bang for the buck? How much cash are you actually dropping to the bottom line? And mileage doesn't really have a cash cost associated with it, whereas fuel does. So even if I had a client on mileage, I like the idea of tracking fuel so you can see how you just described it. Man, I was looking at it, well, I spent a lot on fuel. Right? Well, what kind of close rate do you have? What type of other expenses do you have? Are you getting the bang for the buck on the gas? Or is it time to do some things via technology and do less driving? So there's 2 different methods. They each have their strong points. And I think loading fuel regardless is probably smart.
That's good to know. I'm very inconsistent with that. That's the one thing I'll put on my business card sometimes because I know that. And I'll put it on my personal card. Just, points, whatever. Like points, like everywhere with that. But I'll just start to consistently put it on my business card. See what happens. That's my lot.
Another thing, as far as separating personal usage or personal mileage from business mileage. One of the tools I use is MileIQ, which is, I love it. It's simple. I don't have to really think about it until I need to categorize the drive that I made, because it automatically tracks whenever I'm driving. It automatically tracks where I started, where I ended, and then on a weekly basis, I go in and say, okay, this was a listing appointment, this was a closing, this was whatever it was. And if it's personal, I categorize it as personal. So now I have a detailed report that I can provide to Tom at the end of the year and say, this is my business mileage, and this is my personal mileage, and they're separate. So the app itself, I think is about, I don't remember, $45 or $50 a year. Well worth it. Well worth it. Oh yeah, you definitely want to track.
In this business.
Is there a different way to do it, or is it just mine?
You can have like me, the old-fashioned way, who has a little book in her car and writes it down every time she fills up with gas and when she stops and goes. But I mostly love business because I have a home office, so I work from home, so I just.
I'm asking because the last few years, my lady does my taxes, was just asked how much money I spent on gas. And that's what she gives out.
Oh, no. If you got audited, you wouldn't like that.
Yeah.
I've been audited for money, it's just not fun.
So QuickBooks, the QuickBooks that I have, also it's always running in the background and it tracks your mileage as well.
Okay.
So if I go from here to a showing, it tracks from this address to that address, the exact mileage. And then at the end of the day, you can just go from wherever you go, point A to point B, personal, business, personal, business, personal, business, all the way down. And if you like, yeah.
What kind of QuickBooks do you have?
I keep on popping it open. It's called QuickBooks, Self-Employed. So, and then it literally tracks total profits, loss, and I'm so bad, like, it's such a good app that I don't use enough. Like, I
How much
try
is
to
that?
do it all. Wasn't that much, I can't remember, I think it was like $10. Like, I first started with like a free trial, and I just kept it going, because I like,
How much, like, a
I
month?
think like a month, or, and I think I paid for it for a year and then get a break on it. or something like
Okay.
that. But it's a good app. Yeah.
All right. We kind of wrap things up here, so I give Tom some time here, but just back to where we were. All right, as far as takeaways, big thing is if you're not using any sort of tracking system for your business, start using one now. Another big thing is get in the habit, Dwayne, of making these entries on a regular basis. I do mine weekly. It's just much easier. There's fewer transactions to have to plug in, and it takes me 15 minutes. Not a big deal. The longer you go between making entries, the more overwhelming it is, and the higher the likelihood that you're going to stop using it. So build that habit, do it on a regular basis. I would say monthly at the very least. And again, as Gary Keller always says, review your profitability regularly. So I look at mine on a weekly basis. Sometimes I cry, sometimes I get happy. But every week when I'm making these entries, I look and see where I'm at. So I always know where I'm at in my business. And most importantly, be profitable. So with that, I'm going to bring up Tom Mold, the CEO with Valley Tax Accounting. And Tom, which
Let's go with sole proprietor, sole versus sub S. I've got some business cards here. If you take one and you email me, I will send you some free tax information. Pretty valuable. This industry is near and dear to my heart. We have many clients that are licensed realtors or brokers. I personally have been in real estate for a number of years. I own currently 5 investment properties. And hopefully at the end of November here, I'll be closing on my first commercial property, buying a small office building. I think it's gonna close.
Congratulations.
Thank you, thank you. Yeah, so I love real estate. I am gonna ask a few questions at the end. I've got 3 Dairy Queen gift certificates to give away, $10 each, so pay attention. I should say I have struggled with allergies since I was a young boy, and that's always been a pain until 2020. And now it's downright quickly. Because I'm that guy, you're walking in and they go, do you have any of the following symptoms? And I'm like, yeah, I can't out of here. You can't go anywhere. So if I sneeze or whatever, I'll cover it. It's not COVID. It's fall allergies. All right, so we're going to talk about structure. Now, I'm not exaggerating. We probably have well over 100 real estate type clients in our client portfolio. And, you know, so we see things from a different perspective. And I can look at those that I would consider to be successful, and I can look at those that are struggling. And from an outsider looking in, I can definitely see some common characteristics. One of those, Tom, you actually ended on, which is if you don't have a tracking system, get one. You know, we have a QuickBooks practice in our firm, but what I saw on that Excel workbook is fantastic. And when I'm consulting with clients, or even walking our own talk in our firm, when we're talking about software and process changes, I have a saying: crawl, walk, run. And so that Excel spreadsheet model, that workbook, what I like about it is it kind of gets you into the nuts and bolts of your own business. And that might be a really good crawl if you're not doing something. And you really kind of get the hang of it, and then maybe you're moving on to a QuickBooks. Though some of you might jump right to a QuickBooks type app, and that's okay too. But do something to track. The other thing that I see is those who pay attention to taxes. Not an exciting subject for most people until it's tax time. And let me tell you this. 15 years ago, you could go to your accountant, with the hope and the prayer, and yeah, there was stuff we could do at tax time, but the way that the laws have changed over the last 15 years, it's much harder to change the course of the ship in March. We just don't have the tools at our disposal in the tax law that we once did. And so the time to prepare for taxes is now. I mean, literally now. The fourth quarter, I'm doing a lot of planning meetings with my clients. They're booking an hour of my time, doing a forecast for the year, looking at the rest of the year, talking about tactical or strategic decisions that they can make. Because taxes are going to chew up a chunk. Now, this is where sole proprietor versus sub S comes in. What I'm talking about now, think of it as a box, okay? We're talking about the box that's around your business. And I love that, Tom, I really did love that you kept referring to your business. The realtors that I see that are successful view what they do as a business. Now, when you start, you're generally a sole proprietor. What that means is you're doing business under your Social Security number. That's how most people start. 10 years ago, as recently as 10 years ago, but certainly for the last 30 years, CPAs like myself will send their realtor clients back to their broker, and we would say, go ask your broker if they're willing to pay commissions to a federal ID instead of a Social Security number. We've been pounding on that literally for decades, and the answer was always, no, they won't do it. They won't pay an LLC. They won't pay a sub-S corp. They'll only pay a Social Security number. Thank God that has changed over the last 10 years. Now the brokers are willing to cut commission checks to an LLC or to a sub-S corp. That opens up a whole new world for you. Now, what I'm going to show you today is extremely powerful. And you'll see that, in real numbers. It's not made to be very specific. It's made to be accurate to the order of magnitude. Obviously, I'm not going to replicate actual tax forms for something like this, because you'll all fall off your chair and never want to hear me talk again. So understand today we're talking about concepts, principles, and order of magnitude. So if you're a sole proprietor, if you're doing real estate under your Social Security number, just know you have no legal protection. If you screw something up, you might have insurance. You're probably required to have it. But that doesn't protect you personally. Even a mediocre lawyer is going to sue the broker, and they're going to sue you. Okay, and they're going to force you to try and get yourself removed. If you're doing business under in a box that's a corporate shield, right? You're putting a wall between you and the rest of the world. Now, one of the reasons to keep business and personal separate is that. Because again, even a mediocre lawyer, if a transaction gets screwed up, they're going to subpoena your books and records, or they're going to subpoena me, or they're going to subpoena them both. And even a mediocre lawyer is going to go, oh, look at this. Jim commingled everything. Your Honor, I would argue that there's no corporate shield Because Jim just paid whatever he wanted to out of whatever account he felt like paying. It's all big, one big thing, Your Honor. And there goes your corporate shield. So there are a variety of reasons to keep things separate. Another one is, and I don't have to be theoretical at this point in my career, I can tell you, in an audit, when you have a business, one of the first things you're going to ask is, it's always on the audit question, initial audit questionnaire, do you ever pay personal items for your business? I don't even know why they ask, they subpoena bank accounts now and they find out, but I suppose it's to get you to say something in writing. So, sole proprietor, you have no legal protection. When you're a sole proprietor, your income that you earn, remember that profit at the bottom of the spreadsheet, those are considered wages for tax purposes. So how many of you ever worked a job where you actually got a paycheck? Everybody? Okay. So you look at your check, your gross income, there's withholdings, there's take-home pay, right? What you don't see is that on the other side of the wall, your employer is required to make matching tax payments to some of your tax payments. And yours plus theirs go to the government. That's how you get Social Security and Medicare credit. Well, guess what? When you become self-employed, who's the employer? You are. So guess what? You owe both sides of the tax. To keep it simple, call it 16%. It's actually slightly less than 16%. But we'll call it 16% to keep it simple. So if you have a decent year, and most of, if not all of my real estate clients are having a decent year, even in the midst of COVID. And let's say you fall into the 20, we'll go 20% federal tax bracket. And you're going to fall into about a 7% state. That's 27%. However, you're going to pay self-employment tax on that profit. That's another 16. So what's your tax rate at that point? A lot. 43%. 43%. And I went with a fairly low tax bracket. It's not unusual for a person doing really well to have an effective tax bracket greater than 50%. So at that point, you got to ask yourself, why the heck am I doing this if I'm giving half of what I make to the government? So we don't really like wages, or self-employed profits start considered wages. As a sole proprietor, you have much more limited tax saving strategies. So what do we do? Well, we like what is called a sub-S election, or a sub-S corporation. Now, I'm not going to get into all the intricacies of sub-S today, but suffice to say that sub-S corporation is like a share-based company, so like 3M, Target, right? But sub-S companies tend to be smaller, less than 100 shareholders. Often it's one. It's closely held stock, if you will. And in a sub-S corporation, the profit is not considered to be wages. So if you remember nothing else, remember LLC profit equals wages, sub-S corporation profit equals not wages. So right there, you change the characteristic of the profit that you're earning. Now, the IRS understands this. We don't really like them, but they're definitely not stupid. And so the IRS requires that if you have a sub-S corporation or sub-S election, we'll talk about that distinction in a minute, the owner has to take a reasonable payroll. So what happens is, in the sub-S world, you form the sub-S corporation, you as the owner now go on payroll of your own company. So you're literally getting a paycheck from your company, just like you would get working at Target, you're getting it from you. And what happens there is, you're having your withholdings, the sub-S corp is matching the tax. But instead of paying that and literally throwing the money away at tax time on your 1040, you're moving those taxes into the business as a deduction, which lowers your profit. So you can either put the cash out over here and get no credit for it, or you can do it over here and actually have it be a business deduction. Make sense?
Is an S corp tax different than like a C corp, or, I mean, is taxes gonna be higher than your personal?
A C corp has a flat tax rate under the Tax Cut and Jobs Act, but an S corp and an LLC are what we call pass-through entities. So S corps don't actually pay taxes themselves. You have the business, the income, expenses down to the results that passes through to your individual return. So you'll hear that term in the news quite a bit, especially at tax time, or when they're debating something, you'll hear pass-through entity. This is what we're talking about. This is why when you hear these arguments in the news when they're debating tax policy, and you've got people saying, look, we got to take care of sub-S corp owners because you represent sub-S corp owners. The majority of sub-S corp owners are self-employed people. And so it's in our industry, we tend to be very protective in terms of our lobbying in Congress to take care of sub-S corp owners and LLC owners because of this reason.
I got a question. So
Yeah.
I heard S corp, C corp, and LLC. What's the difference?
Well, that could be a whole class in and of itself. An LLC, despite the fact that it's a limited liability company, is not a company under the law. An LLC is a sole proprietorship with a wrapper around it to give you some legal protection, but it's technically not a company. Sub-S corp is a share-based company. As I said, there's some rules around it. There can only be a certain number of shareholders, very few, and there's only one class of stock. It's a flow-through entity, so the results flow through to your individual tax return. A C corp, 3M, Target, you know all the famous names. Those are also share-based companies, but they're publicly traded. You can have, class of stock A, class B, class C, class D, preferred stock, very complex animals. All right, or do I control this or do you?
Yeah.
Okay. So we're gonna just take a look at a practical example of somebody, 125,000 in revenue, 25,000 in expenses, the sub-S owner payroll of 60,000 a year, the sub-S owner utilizing a 401k plan for retirement. Talk some more about that when we look at the example. The sole proprietor utilizing a SEP plan for retirement, which is pretty typical of sole proprietors or LLCs to use SEP plans. Just to keep this simple, we're assuming the owner is married with no children, standard deductions instead of itemized. And again, we're going for order of magnitude here. So here's what I want you to see is under a sub-S, same exact circumstances, the net cash savings to owner, not a huge entity. One of my real estate clients having an okay year, it wouldn't be unusual to have 100,000 in commissions, saves $11,000. So let that sink in. You do all the work, you don't do anything differently, but just by structuring yourself correctly, exact same results, you save 11 grand.
The only thing different, you have to set up a payroll account, right?
Yes, yeah. Now, one of the things that I shown here is the 401k plan. 401k plans are tremendous. And there are, years ago, there weren't cost-effective solutions for 401k plans for folks like us. Now there are. And there's actually one headquartered right here in Minneapolis, company called TrustPoint that has a very cost-effective offering of 401k plans for micro businesses. But the 401k really gives me as your CPA a lot of flexibility when I'm doing tax planning with you. Gives us another venue for putting away cash for you and making that cash a tax deduction. Now, I showed a 401k contribution of $6,000. In reality, the rules around a 401k for sub-S corp owners is you can put 25% of your W-2 wages. Okay, so we could have in this model put a lot more than that. We didn't. Just again, trying to keep it simple, show you the order of magnitude. But I can tell you that my sub-S corporation clients who actually come in from the cold and do tax planning and really treat this seriously, we can save a lot of money and help you put aside cash for your future. It's pretty exciting. Questions?
I think I need just some clarification just of something you mentioned prior. So on that S corp, like if you say you put yourself on a payroll, $50,000 a year, that $50,000, to my understanding, is kind of, it's deducted as like a W-2 employee, so it's like at like 7% instead of like 30%, or can you like clarify kind of how that works as far as like the money that you're putting in, like what's being taxed? Because that's what I kind of thought, and then when I heard you say it now, it's almost like, so do they not take the taxes out of like your bank account at all? It's more.
No, they do.
They
They do.
Okay.
It's just like a payroll at, again, Target or 3M.
Yep.
So you're paying yourself. Your company's paying you salary. You get your however you set it up, weekly, semi-monthly, monthly. Your withholdings from your check, so the employee side, plus the employer matching, do leave your bank account and go to the government.
Okay.
Yeah, absolutely.
Okay.
But what's different is those taxes now, you used to settle those up on your 1040.
Yeah.
You'd have your income tax and then your employment tax.
Yeah.
And then you'd write a check for that and you got no credit for it. Like you're literally just giving the cash to the government. Here you go, get nothing. When you do it through payroll and your sub-S, those taxes now are deductions that reduce your profit.
Okay.
Far more tax efficient.
Yeah, I think the biggest thing that we've talked about in the past is that confusion with an LLC versus anything else. And that technically you don't need to get an LLC to be an S.
Yeah, so that's a great segue. I mentioned I wanted to talk about sub-S election. So it's a great segue to that. To actually have an actual S corp where you issue shares. Okay, so I have that at the top of my food chain, the way my stuff is structured. I have an actual S corp with actual stock certificates. That's much more expensive to set up. And there's some other things about it that I don't only recommend it to certain people. However, what we do for probably 95% of clients is we have you set up an LLC, we incorporate that, set it up for you. And then we put on top of that what's called a sub-S election. Okay. Form 2553. And what that is it's a mother may I to the IRS saying, hey, under the hood, I'm an LLC. But to the rest of the world, I would like to look like and be treated like an S corp. Much simpler, much less expensive to do. So you get the benefits of the S corp, but the cost and the simplicity of an LLC. And that's what we do with most of our clients, is set up an LLC and put a sub-S election on top of
Which I think is what most people don't do. They get the LLC and they're like, yeah, I'm an LLC and this, here we go. But then they don't do that on top of it. So
Right.
they're not getting those added benefits.
it. Yeah, they're, in this scenario, they're gonna be $11,000 cash poorer at tax time, right? Absolutely. And this is a very simplified model. I can make that number a lot larger. So then I just, showed 5 years and a 5% return. I mean, it adds up to real money. So again, what I see outsider looking in, when I look at what I would consider, really successful professional realtors, they've got a tracking system. Now that brokers aren't so tight about it, they've got their sub-S corp set up so that their commissions get paid to the S corp instead of their social security number. It's a pretty slick operation. And then, we do advanced things like we look at health care. If you're married, here's a little known rule. If you are a greater than 2% owner, so essentially if you're, we'll just say it this way, if you're 100% owner of an S corp, for benefit and tax purposes, your spouse is considered an owner. So watch this. You have an S corp, we set up a 401k plan, we put your spouse as an employee of an S corp, we get to contribute to your spouse's 401k, which also then becomes a tax deduction. So we can do double the cash to you, get a tax deduction for it, lower your profit or your tax bill. There's also, and the reason I mentioned it before, remember I said a limited liability company is not actually a company, even though the word company is in it. There are certain benefits, I don't make the rules, I'm just telling you this, that aren't available to LLCs because they're not technically companies. So for example, I'm on a health plan through Medica that I can only get because I actually have an S corp. The very same person with the LLC, they call the insurance broker saying, I want what Tom has. They're gonna say, well, what kind of company do you have? They're gonna say, an LLC. They're gonna say, sorry, Medica doesn't offer that. There's not just health insurance. There are other benefits out there that you're gonna be able to tap into differently as an S corp owner than through an LLC. There's also the potential for advanced estate planning in the sub-S corp realm. It's different from the LLCs. I don't want to get into that today, but what I hope that you're getting the message is that very cost effective, very good approach as you begin your business or wherever you are in the life cycle of your business is that LLC sub-S election, high degree of tax efficiency. Okay. Any other questions?
Two kind of questions.
Yeah.
One is if you can tell everybody like the amount of money that they make when it's beneficial to do this.
That's a really good question. So when you have a startup business, be it in this case real estate or something else, I like to see a little bit of traction first before we go here, because we have to. You're going to pay to do the LLC. You're going to pay for the sub-S election. You're definitely going to have to be tracking. So we said that anyway. I mean, I look at best practice. You want to have a tracking system, but if you're going to have a sub-S corp, it's a must. We won't put our license on your tax return if we're not confident in your tracking, because if you get audited as a sub-S corp, they're gonna hold you to a higher standard, if you will, than if not. So I like to see a little bit of traction. In terms of numbers, I think when you start to get around $50,000, $60,000, and you can say, hey, I can see my way clear to be consistent from there, kind of build from there. Or as you're approaching that, you know, I think people who are proactive say, I now see that in my site, I'm gonna restructure and get this thing ready.
What's the cutoff on when you paid the maximum social security tax? What is that now?
For 2020, 120 something, I think. I don't know the exact number. But yeah, there was a cutoff. You don't pay social security forever, but you do pay part of self-employment forever.
My one other question or comment was, can you talk about the timeline that people need to apply for this? Because it can't just happen any time of year. There's certain cutoff dates.
And how much it costs.
Sure. Okay. If you did an actual S corp, which, you know, you'd have to really convince me of why you need to do that, you're probably looking at $3,000 to $5,000. And an attorney would have to do it. The licensing CPA can't do it because you're actually issuing shares. And in the state of Minnesota, only a licensed broker and a licensed attorney can issue shares of stock. If you do the LLC sub-S election, which most of our clients do, then you're looking at probably $600 to do that, roughly. To do payroll, whether you use us or you use QuickBooks payroll or use somebody else, you know, that's probably another $500 to $600 to do payroll. Tracking system. I mean, is the workbook a tool available to all the agents?
Yes.
Okay.
No charge.
So a tracking system, I mean, that could be free if you use the Excel workbook that we just looked at. Yeah. So those are the kinds of costs. In terms of the time of year, there really isn't a limitation to when you can ask. I can tell you, you probably all missed it, not that you were looking for it. The IRS last Thursday quietly issued a tiny little press release that said, hey, we're now only 5.3 million pieces of mail. So to
He
give
sent me 3 cards telling them they changed their address.
Ah.
I'm like, oh, that's what I need.
yeah, right,
3
exactly.
different times.
So there really isn't a particular time of year. However, we generally like to get an entire calendar year. So the closer that we can do it, you know, so like October, November, December for Jan 1, or if it's after Jan 1, you know, we can do it in February or March retroactive. The ones that are more problematic, and they do happen, will be like, we'll get a new client and they'll be like, I've been giving myself payroll. We're like, oh, okay, good, you're sub-expert. No, just doing payroll. Okay, so, you know, it's like September. We're like, all right, well, we better get a sub-S election request out there. So now it's September and you're trying to ask for it to be retroactive to Jan 1. We haven't had one of those turned down yet if it involves payroll. So when we do the Mother May I form, we say, hey, this person didn't know better. They've been giving themselves payroll all year. We'd like this retroactive to Jan 1, and we usually get 100% yes if it's a payroll issue.
Yeah, so the cleanest would be, because like I got an LLC in January 1, and then July 1, I did that sub-S election. So like last year, so half my year was LLC, not, right?
Okay.
And then the other half was, so, and I talked with somebody else and they said like in March, there's a deadline that needs to be met if you want to.
Well, so from the time you become an LLC,
Yeah.
there's like a short grace period where you can do your sub-S election and it's kind of rubber stamp, right?
Mhm.
If you get beyond that grace period, that's where you better have a good explanation.
Right.
And what we have found is that payroll seems to be that key that opens the door.
So is that only if you've been using like official payroll, or what if you're doing like the transfers? I forget what it's called. The,
Well-
the owner of the company is a draw. or
Yeah,
whatever.
so the concept of a draw is really a sole proprietorship LLC concept. So that's the idea where you've got excess cash, and I'm just gonna, take some of that.
If that's how they were paying themselves payroll, is there?
Well,
a
that,
way
but that,
of them retroactively?
that's not payroll. And that's a really timely thing because I'm right now defending, well, trying to defend, a guy who came to me and he, kept using the word payroll, and what it was draw. And when you're a sub-S-corp owner, as I said, you have to take a reasonable wage. So what this guy had done is he took $144,000 in draw, and he paid himself a salary of $4,800. I'm like, yeah. Not sure quite sure how I'm gonna defend you.
work.
So,
But if you were
draw
doing,
is not payroll.
okay, and if you were doing a draw of like $1,000 a month or something like that, thinking it was payroll, is there a way, is that like, it seems more defensible than that, but
But we paid all the taxes.
Well, when it comes to payroll,
Then it's just a
it's
draw.
kind of a black and white issue. And you either had a paycheck with withholdings and employer matching tax, or you did. It's really difficult to be, half pregnant and draw. And then do the taxes. And they're really nasty about it too, because payroll tax or the non-payment of payroll tax has the highest penalties that we see. It's a 50% penalty. So they're pretty serious about payroll.
How much do they tax you on draw?
Well, draw, think of, are we talking sub-S-corp? Okay, so a distribution, which is the term we use for sub-S-corp, draws LLC, distribution, sub-S. Distributions are considered tax-free, right? Because the earnings have already been taxed through the flow-through process. The issue that we run into, and again, we don't be theoretical, that's not going to apply to you guys, I don't think, are where somebody takes out tax-free distributions in excess of the retained earnings in the business. Then that becomes a problem.
So if it's like you put yourself on payroll 50,000, but you're doing draws up to 75,000 a year, so you're doing, or like 80,000, so you're doubling, or not a draw, whatever the distribution, you're taking out $80,000, but your payroll is only 40,000. That's an issue.
I wouldn't put it that simply. That really depends on the overall context. If you've had years of making profits, and you've not taken out many distributions,
Right.
you might be fine that year taking out 80,000 distributions, 40,000 in salary. Where people can get in trouble is they'll start up a business by borrowing. So they don't, they have debt equity in the business, and then they're taking out tax-free distributions, and they don't really have equity in the business that allows them to do that.
Okay.
So when you do that, those are called excess distributions, and they're taxed at a flat rate under 1040. So we try to avoid that in tax planning.
So I got one more. So I'm similar to, so I started as LLC, I switched over to S Corp. I used to do like the 30-30-30, like 30% of tax, business savings account for taxes, 30% into my business account, and 30% into my personal account. And then just recently I switched over to an S Corp before the fourth quarter started, so that we can get started on that. How is that going to impact like me taking draws at the time, because I was an LLC, draws now switching over to payroll?
So a little bit of that depends on when you say switched over. So you did an election, a sub-S election. Did you ask for it to be retroactive to Jan 1? Or did you just ask for it to start now?
I have to ask them. I think,
Okay.
I don't know.
If you did it retroactive, which is normally what I would recommend. Though, you know, I need more facts, but if you did it retroactive, then you might have a year where your distributions are out of balance to your salary, but that's at least explained, right? It's not like you were in your 4th year of being a sub S and you just decided to go off the rails on a crazy train. That I'm less worried about.
Okay.
Any questions? You want to switch to the other?
Well, if we're already
Okay,
overtime.
right.
I appreciate everybody hanging around and being here. So, thank you, Tom, for
You
being
bet.
here. I really appreciate it.
Got another PowerPoint on specifically around some real estate. Again, you take a business card and email me. I'll send you both of these PowerPoints and some other tax stuff for free. All right, can I do my gift certificate?
You certainly can.
All right. Great. Okay. So what is more tax efficient, an LLC or a sub S corp?
So that's
So
what.
that's-
I saw your hand, Bill.
You raised your hand.
Apple Valley Dairy. What are one of the key success factors for successful real estate professionals that we talked about today? Tracking. Absolutely.
Oh, I never raised my hand.
I learned that first question.
All right. And who's your favorite CPA in the South Metro?
You are. You.
All right.
And I would just say on top of that is that you need to talk to the expert, right? We all know that we're experts in real estate and marketing, nothing else, right? And so you need to get an accountant as fast as you can if you don't have one.
Yeah, definitely. And as I said, I'll have Taylor get these put up on the Facebook page so you can download the workbook and the tutorial. Don't hesitate to reach out to me if you have any questions. More than happy to help you. So thanks again, everybody.
Thanks, Tom.
Appreciate it.
Oh.
Sorry.
Once you're
Well,
famous
see
here,
if I
we
can
have
get
this.
on if I can get on a computerized system, I first started next year.
Workbook.
Really
good.
Instead of doing it the old manual way.
The-
That's when I was for your helper, that's how we did it, that's
Yeah.
what I've been doing ever since. And you know, there is some advantages to that though, than pulling up a screen and trying to find, scroll through to find something